I would say maybe 14, 15 months ago, we had talked about cryptos when the whole thing, took the world by storm. And then we were wondering what it is. So here's a quick recap. So the main thing is that, look, even as we speak, despite all that people thought that it was just a passing phase, maybe it's there, maybe all of us, will have to watch and wait. Look, it's already close to $1 trillion trade going on there, and the technology behind it is giving professionals a business of close to $11 billion, and that technology is blockchain, and the world has gone crypto for as a kind of a way of life, and it's expected to grow. Just the technology piece is expected to grow by nearly 60% year on year, and so it's there. Now, what is blockchain for those who may be hearing of this from around? It's simply a digital database or ledger that is distributed among nodes of a peer-to-peer network. The two important things to quickly realize is that it's peer-to-peer, highly democratic. There is no, body sitting there governing how the values are handled, and everybody can become a part of it. So there was the concept of immutable. It is something that preserves your authenticity. It cannot be replicated, and therefore becomes something so unique that you can then put a value to it and trade on it over and above what you're doing in the real world or in the now known mechanisms of the stock exchange or the businesses that each one of us does, selling cakes or clothes or whatever that we do, one and only furniture. So there was this thing about Bitcoin, and it is only in 2009. That means it's fairly, it's been there. The whole concept started in 1991, but in 2009, this thing took a foot. And it's important to quickly realize it's all about electronic cash system that's fully peer-to-peer. That means each one of us who wants to participate can, and there is no trusted third party. All right. Now, right as we speak in 2023, what is important for us to understand is that there is an ecosystem which we need to be familiar with. So you will hear of three very important aspects, and that is the context in which your participation or your awareness should be, operated. So the first thing is something called blockchain networks. That there are these blockchain networks. A block is something where there is somebody who created something, or minted something, and there's a validation process. And so technically they call it a block, and it kind of maintains secure, scalable, stable, and private mechanisms by which people can transact. The second is something called tokenization. And that's what the focus of today's discussion will be. It's asset tokenization. It's basically something by which you can create, trade an asset-based token. So whatever is your asset, and we'll come to a definition of that. You look at yourself, you're an asset. You're a person who has created something that creates value. You can, through a mechanism, create a token of it, and that then is something that can be then traded in a very secure and stable fashion. So these are typically, there's a word you will keep seeing, NFT, 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 yes. So that's something which is in English called a non-fungible token. And there are platforms where these tokens are available. There is an assurance that it's an authentic thing. And you can, if you have an interest in it, you can offer to purchase or offer your own token and trade or barter your token. Then there is this blockchain market or blockchain-based market platforms. These are basically to do with, decentralized finance and huge marketplaces for practically everything. In fact, the world is moving into this everywhere. Even if you knew it or didn't know it, you already tokenized your credit card. If you use a credit card, a couple of quarters ago, the RBI came out with a very important, legislation, which meant that your data, to make it secure so that your identification of your details is not available broadly, you could tokenize your credit card, and therefore now by default, even whether you know it or not, your credit card gets tokenized. And therefore, the transaction happens only with the last 4 digits of your credit card. So these are the three things which take you through, which make you ready for handling this new asset class. So your new tools for the trade and managing your wealth is going to be in the form of these three. This is the way I've called it. People who are experts and already into it, please, we can have a conversation later on if time permits. So it's to do with smart contracts. They just called it smart contracts to differentiate it from the typical contracts, which are also assured, but through a lot of registration processes. So basically, it's a guarantee of integrity. And the most important thing, automatic enforcement. Nobody can bully you. Once a smart contract is out there in this space, in that marketplace or in the system, it gets enacted, it gets exacted on due date in the manner in which it was recorded. The most important thing, and that's what we want to understand today, is crypto assets. What are these crypto assets? Crypto, of course, is a typical word to define something which is, encrypted, something which can not be easily replicated. And it's all to do with typically NFTs. Securities means anything which is offered by way of a debt paper or some form of a financial security. Those are now, so that you don't have fraud and manipulation of these documents. Those securities, there's governance, that means rules and regulations which should not be misinterpreted. And of course, rewards that you earn. If you win something, that prize of yours is kept in the form of a crypto asset. And then, of course, the whole aspect of how you work with cryptocurrency. Now, where do you store all of this? It's stored in crypto wallets. So each one of us, apart from having a bank account, would sooner than later start having crypto wallets for storing, transacting, and holding our crypto assets. It's like your, in a way, like the way you have a demat account for your, quoted securities, like that you have. Okay. So quickly, I've got a few more minutes left to explain what are non-fungible tokens. So first, there's a tokenization process. It's something where you issue a digital representation of an asset, and an asset can include anything that's physical, like real estate, art, but it also can include financial assets, and that's what securities and all are referred to, like equities and bonds, and then non-tangible assets like intellectual property or even identity and data. So the important thing for us to realize is, as many of us in this group are individuals with capability that's creating value, we have something unique, and we may be doing it in our own individual or as an enterprise. Each of us can now become and tokenize what we have as an asset, whether it's a personal, work of art, or something that we do, a process that we do by which we create a good business. It could be a private business, or whatever we do, we can tokenize it and start having that move up and down, depending on the way in which there's a demand for it. So quickly, these are the asset classes: financial securities, intellectual property, physical property, which is fleet, equipment, luxury goods, one and only furniture, if I may refer to it often, physical commodities, just the ability and the right to create things, real estate and land, very important for all the architects here, that yes, soon all of us will be able to geotag and then subsequently have our real estate in the form of a token, and then you'll be able to find your value and can trade, because there's an assurance of ownership once the validation is done. Artwork and collectibles. By the way, everything can be tokenized. So medicines, tickets, loyalty, reward points, everything that needs authenticity. So what do we need to do about it? It's absolutely at your doorstep, just the way you operate a bank account. That's the way in which crypto assets are done nowadays. You sign up on a crypto exchange or wallet. There's a very famous one called OpenSea. Then there's WazirX and a couple of more, which I will explain quickly. You get set to acquire the NFTs. For that, you purchase a crypto coin, which is this most popular is Ethereum. And there are other NFTs themselves, because NFTs can be traded because there'll be a value. So you can do that. And once it's done, your trade is blocked and nobody can deny that it happened. And then The main thing is that you have the marketplace which allows you to search, buy, and store these NFTs. So it's going to become the new normal, is what I'm saying. A quick example, a real estate tokenization. Basically, your property will have to be held in the form of a limited liability company or a limited partnership, and the interest or shares of that company will get tokenized. You will have a value that will be placed. There may be a registration process, etc. And basis on that, describing that NFT, you will find hundreds and thousands of interested people in that space, and you'll be able to transact, and they'll be able to transact further without all the particular gore that you go through. Maybe brokers will be made irrelevant. So this is one. So towards the end of what I want to say, currently in December 2023, the most popular one is OpenSea, a marketplace where you can find it. Just go there and check it out. There are fees involved. There are some, and you have to be, of course, in OpenSea. It's only to do with, NFTs and cryptocurrencies. They don't allow the fiat currencies like your rupees and dollars. Every trade has something of a charge of 2.5% and something called a gas fee. A gas fee is something which is a money which you pay every time you transact for contributing towards creation of the NFT. There's another one called Rarible, but mind you, just for our knowledge, India is one of the largest places where crypto and NFTs are traded. So WazirX is huge. It just, in one particular time, 2 years ago, it just did $24 billion of trade just when RBI clarified the position on crypto and NFTs. This one is a bit expensive. It charges 5%. And there are others as well, such as Jupiter, Meta, Bollycoin. Anything that you have fascination for Bollywood, you can create Bollycoins, things like the posters and songs, etc. There's something called Bayou Coin, which allows the widest variety of cryptos to trade with. And of course, there's Binance, which owns WazirX. So here is my conclusion. You must tread. Unless, of course, you're a type who wants to just see how things are done and don't have the confidence. But if you do it with caution. Please evaluate this asset class sooner than later. A lot of what you own will be in the form of NFTs. But before you buy an NFT belonging to someone else, please do a research so as to avoid scams. Please value your one-of-a-kind assets as a matter of practice, because it will form part of your of the way in which you'll be able to get some form of liquidity if that's required. And you must have, if your current wealth manager does not know about NFTs, then find one who does. Thank you very much. And if I've overstretched, namaskar and sorry.